everybody, welcome to Trader Merlin Show. It is your Friday Junior, as Dave posts in the chat. Yes, it is Thursday afternoon edition of Power Trading Radio. Hope you guys are having Power Trading Radio. Slip right there. It's like naming your ex-girlfriend's name while you're in the sack. Boy, that was a bad one. Trader Merlin is the show today, yes, and it will be probably for quite some time. Anyway, I hope you guys had a fantastic day out there. Quick shout out to Marco Da Silva for posting, give a little $2 donation. Thank you, Marco. Appreciate that. Way to start off the day out there. We do appreciate those contributions. Today's going to be a huge letdown for everybody out there. You guys were all in this big buzz yesterday because of Bob Dunn's show. I really enjoyed having him on. As you guys know, Bob is just an absolute character. He's got so many great stories, and just his trading experience and knowledge is what I like to feed off of. So I was really happy to have him on the program yesterday. And I know that many of you guys are going to go like, well, today's going to be boring. You're answering questions. I'll do my best to make it as engaging, as exciting as possible. But the stories that I want to tell you from my trading floor days are going to be in the book. I have to save those I got to save something for the book. Anyway, let's start things off with your update, get a little idea of what happened out there in today's market. It was as expected. I think it's rather interesting to see what happened today, because this is pretty much, if you looked at Bob's show, this was what he kind of was forecasting. And I also mentioned it before Bob even came on the show yesterday. I said, look, we're coming into overhead supply on the NASDAQ. That's all-time highs. You're coming into a supply level on the S&P. So if you're going to see a little hesitation, now might be the time. And today, as you can see, that's what we had. You had the NASDAQ 100 right here, this little red candle. Yeah, believe that or not, folks, it's a red candle. Can you believe it? A red freaking candle? It's the first time in a week and a half we've seen a down day on the market. Unbelievable. Anyway, NASDAQ 100 was down 0.42%, as you can see, finishing at 9,644.5. You know, the fact that the move was kind of muted, it wasn't a significant down day, doesn't really lend us to, too much credibility to the overhead supply level. What Bob was talking about was specifically, I believe he said, waiting for a doji, or waiting for a spinning top formation. And that's pretty much what we had today. What he's going to be looking for, and what I'll be looking for as well, is going to be a break below the lows of today. So let me snap this onto the NQ. So for those of you who are NASDAQ traders, you're looking at 95.72 If we get a print or below that, meaning you can start getting people selling below 95.72 then we could see some more downside movement, because I think we'd all agree that this run is due for a little rest. Even if it's just a day or two to the south side, I do believe you're going to see some little bit of rest here for the market. I don't know how far it will sell off. Obviously, I hope it falls significantly, but given the data and stuff we're seeing, I don't see it really getting crushed. Let's move on to the 10-year. Now, I've got a question that came in about the 10-year. Really nothing extreme, although the last 2 days have had some pretty significant moves. You've seen the yield on this one jump pretty consistently. We are up at about 8%. Moved about 8% today. I believe we're at 0.85, but I'll show you that one here in a second, as it's a question from a listener as well. Siraj, thank you very much, my friend. Thank you for your continued support as well. I see you on here all the time and always asking questions and being very supportive. So thank you so much for the support and the contribution today. You guys are awesome. Let's go to the S&P 500. Down ever so slightly. It really showed, I'm going to say, good strength today, because it kind of held its own. Yes, it did have a down day, but it wasn't bad at all. Down 0.13%, closing at 3,113.75 as we speak. I say closing, guys. I think you understand that I'm not going off the official clock of the exchange. I'm going off of what I see in this market as of this second. So some of you may be watching CNBC and they'll say, oh, the market, S&P was down 0.5%. Well, by the time I did the show, it bounced back up. So I'm going off of the right now price of these markets. I think that's better than going off old information anyway. All right, crude oil was your next one. A good day for crude oil, slightly up. 37.33 is where it's at this very second. It didn't break the highs from yesterday. I really kind of expect this to have a continuation. We talked about retest of that $35 mark. It hasn't quite done it yet, so it may retest it, but I really do think you're going to see crude oil cruise on up to that $40 mark here in no time, and probably ultimately close that gap, which is going to be around that $50 mark. That was your number 4. Number 3 brings us to the RTY, the Russell. This is what's called a hanging man formation. Technically, according to Mr. Steve Nissen, it's a reversal pattern. I don't know if I buy it. To me, it still looks rather strong, because it shrugged off a significant losses during the day. Right now, you're looking at a 0.43% gain out there for the Russell 2000 to 1455. All right, creeping on up, gold finally getting a little bit of a pop to the upside after 2 ugly down days, up 0.93%, 1720 per ounce is where it closed at. If you guys do have gold coins, actually my friend Katie was actually trying to sell her gold coins, and they were offering her more than spot price because there is a demand, especially from coin dealers, for gold coins. So maybe now might be a good time to sell some of them bad boys. All right, number one, Bitcoin, the B to the T to the C. 2.18% move, creeping back towards that $10,000 mark. There was some bold claims today from an individual. I forget the gentleman's name, but he's a bigwig in the industry, claiming that Bitcoin will get to $300,000 per coin. Yeah, it will at some point in time. If we continue to get adoption of Bitcoin, it becomes more mainstream, which I think every day it is kind of becoming more and more mainstream. Once we get to that point that it becomes very mainstream, easily $300,000 a coin, which is why I have 6 of them right now. I think I have 6. I've been flipping them to different cryptos, but right now I got 6 Bitcoin. That, my friends, is your top market update. Hopefully you made some money out there today. Tomorrow, I think, will be the most interesting day, simply because we've had such a strong run for almost 2 solid weeks. We have our first little hesitation. It's right before Friday. It might be that moment where we get a little bit of a drop, so keep your short guns out for tomorrow. I want to show you one other thing, which is part of the reason I think you saw some weakness. The last couple days have brought on some extremely good news from an economic data perspective. Things have been looking very, very good. Here's what happened today, and while you're looking at the very top there, you see the Challenger job cuts, that dropped, but it's still a significant decline in jobs. The one that's noteworthy is down here in the middle, which was the unemployment claims. We've been seeing the trend of unemployment claims significantly drop, which of course was to be expected. But they've been a little aggressive, and we actually didn't meet this mark this time. So this is still saying, all right, it's worse than expected with regards to how many people are just starting to file unemployment claims. They had 1.877 million. That's about 57,000 more than expected. Not a huge miss, but still, it kind of paints the picture that we're not quite out of the woods yet. The other data here I didn't think was that extreme or that bad or just really that noteworthy that would warrant me going into it. But I thought that might be one of the pieces that set the tone for the day. All right. Let me see if Roy Hudson says, Merlin, are you still with OTA? Yes, I am teaching for, actually, no, let me take that back. I'm not teaching for Online Trading Academy. I'm building content. So right now I'm on the back end building a lot of the video content for on demand. Right now we're working on Strategic Investor, which I'm really excited about. But if you've watched Core Strategy on Demand or Futures on Demand, that was myself and my team building those products. So we'll be doing more and more of that. Right now we're going to do Strategic Investor, and we're going to be slated to do options next, which I'm also very excited about. So yes, I'm with OTA, and I will be to the very end. I think this whole thing has been an orchestrated coup, as I mentioned, by a couple disgruntled employees, and unfortunately it really put a black eye on the company, which it shouldn't have. But in the end, all will work out fine. The good news is that there was a tentative agreement for a settlement, which was great. And of course, I saw Thomasina mention something about the video that went out from Eyal Shahar. That's just a great video. I mean, this poor guy has just been taken through the ringer on this, and he really, really, really has passion for student success and just the content and services to help people. Because one of the things that he helped me out with early on was I was going through problems and struggles in my early days of trading, and what I respected about him so much is he would look at people who were struggling and find ways to fix what their problems are, and it's usually rather easy to see what people are doing wrong. Most of the time it's greed, most of the time it's their inability to admit that they're wrong, taking too big of risks. Mine was psychological and also my cockiness, so he kind of really helped me through that. And I've seen his passion, dedication to students over the years. So the people that are always out there slandering him and giving him a bad name, I'd love to get in a ring with them and beat the living crap out of him, because honestly, I don't think they know the man well enough. Anyway, where's the video? I think it was just sent out to the Online Trading Academy database. It's also on MyOTA, so you can see the video if you log into your MyOTA. If others that are outside want to see it, maybe I'll see if I can post, if I get permission to post it on my YouTube, or maybe even play it for you guys. I think it was really good. It's passion. I can tell he was real close to tearing up out there, because this is his baby. This is passion. This is what he's always wanted to do, and he wants to make this the best thing it could possibly be. And then you have some people try to tear it down, which obviously is disappointing. Okay, let's see. I'll move on from there and go. Yes, of course, Chris. It's great content. The SI stuff is really cool. You know, one of the things I hate about the finance world is how deceptive they are and how they try to put you into products that will bleed you dry. I'll give you one example. An annuity product, for most people, is not appropriate. For some people, it's very appropriate. Unfortunately, it's peddled as this investment vehicle that you should all be buying into, you should all have it, and the trick is there. It's sold by insurance companies and salespeople, and as we've learned, salespeople, in many cases, will go and do whatever they can to get a sale. They're going to do whatever they can to get you to sign that dotted line. Well, I've had the privilege of working with a couple people in the insurance industry, and we've talked about annuities, and that's their bread and butter because the fees are so high with bread and butter. Fees are so high with annuities. Sorry, I was looking over here. Thank you, Brendan, very much. Thank you so much for the Canadian dollars. I've got my currency trade for the day. I'm going long Canadian dollars, which is good. The Canadian dollar actually taken off here recently because of the crushing of the dollar. Anyway, thank you very much for that one, Brendan. I appreciate it. So if I'm a salesperson, I've got two products, both of which are not necessarily great for my client, but one's going to give me an extra 2%. I'm going to push that thing like nobody's business. And that's what happens with annuities. Quite often people are put in an annuity which they don't need to be in. It has massive surrender fees. It's got all kinds of fees riddled in there. So even if you're in something and the market gains, let's say 10% in a year, at the end of the day, after fees and your caps and everything, you might only be getting like 3%. Well, that 7% should be kept for you. So, one of the things we're doing in SI is basically saying, here's how you design a self-directed annuity. Do it yourself. Of course, there's risks involved. You have to know the risk with anything. But once you understand the process, step 1, 2, 3, 4, 5, repeat. 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, and you keep doing that, you can replicate what's being done in an annuity. And it's simply using different investment products. It's using some bonds. It's using some options, some ETFs. But I find it to be a great piece, and that's part of the Strategic Investor course. Anyway, let me go to mail your own. You mean make your own annuity? Absolutely make your own annuity. All right, let me go to some listener questions here. This is kind of all across the board, guys. All across the board. It is because I've gotten a lot of repeat questions. I want to make sure I get to them. I know there's a bunch of people who are very passionate about their questions. So let me read this one from Karen. This one came in a couple days ago. I heard you talk about the Dixie. I still don't know what you're referring to. Can you explain it? Sure. When I talk about the Dixie, I'm talking about, a southern type of music. Dixieland jazz, we got the... I'm totally kidding. The Dixie is just an industry acronym or a reference to a dollar index. Now, there are two dollar indexes out there. One, the main one that most people are looking at, is called the Dixie. Now, what the Dixie is simply saying, how is the U.S. performing against a basket of 6 different currencies? You're talking the euro, the Swedish krona, the Swiss franc, the Japanese yen, the Canadian dollar, and the pound. Those are the 6 currencies. The unfortunate thing about the dollar index is how it is so heavily weighted towards the euro, right? It would be different if all 6 of those currencies were evenly weighted, right? And had the same weight to give us a better reference. But let's be honest, and no offense to my Swedish friends out there, is the Swedish krona really a staple of international business like the euro? Probably not. So, you're only going to get, I believe it's 4% is weighted towards the Swedish krona. You're also looking at 58% weighted towards the euro. So while it's a good measurement of how the US dollar is performing against other currencies, it's totally biased, right? It should basically look the exact opposite of the euro USD. So let me, Michael, I'm not going to show Wallop, but I'm going to get to your 2 questions today because I know you've been asking me and I apologize. I'll get to those. Let me show you here real quick on TradeStation. What I'll do is I will create 2 separate charts here just so you can see the difference. Now, the symbol for the Dixie is just $DXY. It actually depends on whatever trading platform you're using. But here is the Dixie, right at the bottom. What I'm going to do is I'm going to copy this chart. It takes me just a second to do so because the chart master is not here, so I will be doing all this myself. And as we paste this one on here, I will throw in on the very top, we'll do EUR USD. Now, I mean, if you're going through your therapist and he's giving you a Rorschach drawing, kind of test, would you guys all agree that those are just about identical but in opposite directions? That's the gist of it here is if you're looking at that dollar index, the Dixie, then you're pretty much looking at the opposite of the euro. Now, why is this important? Because a lot of people are using that dollar index as a reference for the US dollar. So if right now you're seeing the US dollar just crumbling, right? It's gone from 100 down to 96 and change in very, very short period of time. What that means is anything that's against the dollar is going to be rallying. So obviously, Brendan's probably loving this right now because if we were to look at the USD CAD, right, the dollar's dropping, which means that Canadian dollar has been rising significantly. So congratulations on the sale of your house today, Brendan. That means that your Canadian dollars are going to be worth even more going forward, which is pretty awesome. So hopefully it keeps on rising so you're sitting on that pool of cash and convert it back and forth. So that's the basics of it, Karen, with the Dixie index is really saying it's simply a basket of currencies traded against the US dollar. Now, I kind of created my own here. I just restarted this. Darn it. I usually have it on this bottom right-hand corner. You can see all these different comparison charts. Normally what I like to do is I take the US dollar versus about 6 different currency pairs and I graph them so I can see which one is performing the best or the worst against the US dollar. So, a couple things. Number one, the Dixie is simply the dollar against 6 different currencies. That's going to be number one, the euro at 58%, the British pound, the Swiss franc, the Japanese yen, the Canadian dollar, and the Swedish krona. If you want to dive deeper into that, I would simply say take those currency pairs, those 6 currency pairs, put them on a chart like I showed you here on TradeStation, or some other ones will allow you to do a perf chart, and then you could graph it and see which one is the strongest. Because if you look at the Dixie, you know most of it's against the euro. But there might be one that's moving much stronger or weaker, and you'll never know unless you break apart the charts. So there you go. That's number one, Karen. Number two, for our question perspective, let's get back to our questions here. I'm going to try to fly through these guys, then I'll get to yours. I see there's a bunch coming through. Michael sent in a couple. He says, you mentioned credit cards. What is your take on American Express Classic and Revolut, the one without fees? Which one do you prefer and why? I don't prefer either one of those because I think the Revolut is a international card. Like I believe it's UK, right? It's not a US card, and obviously I'm based in the US. What I would recommend is it's not specifically about which card is better. It's which card is going to serve your purpose better. And this is part of the thing. I want to redo it specifically for Trader Merlin, which talks about planning your financial future and doing some stuff on credit because I'm so passionate about having a great credit score and making sure that your credit is as good as possible. These cards are money-making machines for the credit card companies because most people misuse them. I'll give you an analogy here. I'm the master of horrible analogies. Las Vegas is the city built off of gambling. It's the city that says, come to us, bring your paycheck, don't have a plan or a strategy or a tactic or rules, and just lose all your money and be happy that you got, some cheap drinks and girls in skimpy skirts. That's what Vegas is. They want you to lose all your money. There is a small subset of people who go to Vegas and they don't say, I'm gambling. That's me. I go to Vegas and say, I'm working. I'm going to do as much as I can to stack those odds in my favor, whether that might be counting cards at the blackjack table, doing proper money management, risk management, those types of things, understanding the power of runs, scaling in, scaling out of bets. I mean, that's all stuff that I use from trading that I apply to Vegas. Most people don't do that, which is why most people lose. Now, of course, the casino doesn't mind the few people that win there or do well rather consistently because there are so many people who lose everything. It's fine. It's a wash. For credit card companies, it's exactly the same. The vast majority of people carry a balance. They're going to pay that 20% fee because they didn't even notice it. Might even be 29% fee. And all of a sudden, you'll be in that thing forever paying interest on top of interest on top of interest. But if you're smart, you're using it for its purpose. You are going to use that credit card for all it's worth and make that card lose money. How do we do that? Look, over here, I already covered this one before. This is just a page called creditcards.com. I know I've shown you this one before. But to go to Michael's question, if you're going to be traveling a lot, that Revolut card might be great for you because it has no fees, no ATM fees, no international transfer fees. There's advantages there. But I could very easily, if I'm a U.S. citizen and don't have all that, I can go out here and pick a travel card. They're all going to be rather good. Let's see, why does my fiber optic take me so damn long to get through? Where's my travel card? There's, some that'll give you, let's see. Let me scroll down here. I'll get that coronavirus ad out of the way. Here's one's got a $69 annual fee. The rate's real high, but the key is you never carry a balance on the card. Most of them are going to have no fees internationally and things like that. The bottom line is, I have to tell you, it needs to be for what you want to do. So let's say Brendan let's say he just loves to travel, not fly, but maybe likes to stay in nice hotels. Then you get like a Marriott card or something that's going to reward you for what you like to do. If you shop at a specific grocery store or a specific airline, yeah, the points guy is also really good too. Randall posts that one in there. That's another great site for you. One that I really think people should take advantage of. If you want to help fix your credit, you simply look at these balance transfer cards. These are great because some of you might be sitting on a credit card right now that's paying 29% interest. And I've done my best to curtail my cursing, but if you're paying 29% interest, what the hell is wrong with you? Stop it! My God, that's murder. That's highway robbery. It should not be allowed, but credit card reform didn't pass in the U.S. because certain senators were given shares of Visa to vote against credit card reform, but we won't go down that path. If you have credit card balance that you're drowning on, then get one of these balance transfer cards. And I'll show you a couple simple ones, like right here. 0% balance transfer for 21 months. So if you have, let's say, $10,000 on a credit card and you're paying 25% interest right now, you can flip it, transfer it over to this credit card, take all $10,000 into your new credit card, which offers 0% for 21 months. That's over a year and a half that you will pay zero interest. And all that time, you can take that extra money and pay this number down. If you still haven't paid it off by then get another balance transfer card. But my heavens, get rid of that $25% balance out there and move on to something else. So, Michael, I don't have a preference on American Express. It's the one card I don't have is an American Express. I have just about everything else. I got Visa, MasterCard, Discover are my predominant ones that I use on a regular basis. There we go. All right, so that's the credit card question. Let's go to Oscar's. And thank you, Oscar, for the support. And by the way, let me just give a big shout out to those of you who sent in questions and comments last night. I received a lot of comments, very supportive, also asking for specific guests on the show. I personally would love it if I had some kind of assistant to just book and call these guests and do it all for me. But I have a request from Michelle Volmrang, Debbie Haig, Jordan Matthews, Kevin Cagney, Robert Dumar. I will do my best to get these guys on the show since it's been requested by you. I know that some of you know these individuals. Great. If you have somebody you'd like to see on the program, then send them my way. I'd love to interview them and get as much said. Did I say American Express? XS? I might have slipped there, Chris. I meant to say American Express. Sometimes I slur because I talk too damn fast. Oscar says, Merlin, is this the new normal? Up, up, and away, bull, 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 all bears alive are hibernating. Well, they're not hibernating. They're getting slaughtered. Bears are getting crushed right now. And the question is it the new normal? No. It's not the new normal. I think it's just part of a market cycle. And it's part of a market cycle that, as I mentioned when I did the show, Market at All-Time Highs probably 3 weeks ago, you're dealing with a market that is being completely pushed in a direction by the Fed with that money coming in. Now, here's the other part. If you have all that money coming in by the Fed and we come out of this and we realize, as I do believe, that this coronavirus issue was completely overplayed. It was a media hype, and who knows, I'm not going to say it was a hoax because clearly people died from this, but I don't think it's as severe as they said. If we come out of this smelling like roses and things get back to normal real quick, then yeah, these bears are going to get murdered, and you're going to see this thing continue to rip up. Like I said, I mentioned 4,000 kind of joking, and some people messaged me saying, you're crazy. No, I don't think that's a stretch by any means. If things get back to normal and you have an extra $5 trillion worth of capital pushing these markets, it's going to go ballistic. And I think that's what you're starting to see. We'll really have a better idea in, let's say, about a month and a half. As soon as we get to the first week of July and earnings start, and also after all these protests and mass crowds together who are not supposed to be close and social distancing, we'll see if coronavirus rears its ugly head. And if it does come back even more fierce with more body counts, then all of a sudden we may have another big market drop. But we'll have to wait and see. Obviously, nobody wants to see anything like that happen, but it's certainly a possibility given the fear factor that we've been put under with regards to this coronavirus and how it's going to impact us. So I don't think that the bull market is a new normal. I think we are just in a bull market phase. At some point, those bull market phases turn into bear market phases. It's inevitable. It's the history of financial markets. It's just when. Oh, Brendan's just loading me up with the 99 cents. I got 99 cents and Brendan just sent one. Boom. All right, I'm a rapper today. Thank you, Brendan. I appreciate that. Don't spend all your money, Brennan. I know you just sold your house, bud. Keep that cash for yourself. But thank you very much. I appreciate it. Let's see. What's another one? You mentioned TY, price in a bullish flag. So does that suggest that we will see negative rates? That's from Nicholas. Now, I want to revisit this one because, when I talk about a bullish flag, let me go back to that one. And let's see if I can shrink that down, put this back over here. When we talk about a bullish flag, it's a really powerful pattern that I love. This is a stretch to call it a bullish flag. The only reason I call this a bullish flag is because one of the general properties of a bullish flag, and let's see if I can, can I do a free draw here? It won't let me do a free draw on this one. Let me open up PowerPoint, and I'm going to do it in PowerPoint here just so you guys have an idea of what that might look like. So let me see if I can go to, go to the pen here. I'm just going to draw it on the screen here so you guys can see. A bullish flag, on the bottom right-hand corner of your screen, it basically means price has done this. It started off, it shot up, and then it hesitates like that. That pattern right there, a lot of people will pull lines across the top and the bottom of price action and say, there's your flag. You've got the long pole, which moved, that's this big move up here. All right, that's the pole. Sideways consolidation forms a flag. And there's different types. Your type of flag may look like, let me clear that. It may look like this, where it's kind of sloping down. It may be totally horizontal, right? That's called a high tight flag. And a lot of people really like, I would actually prefer to see a high tight flag, which if you look at to TY right now, I think we'd all agree that that's a high and tight flag, right? You could argue that this was the pole, right? And then you have this flag pattern, which is really, I'm sorry, it's on snap mode right now, so it's driving me crazy. Don't get off of snap mode. There's your high tight flag, and I'll do it from back here, but really that it was just this period of compression. Now, what's interesting is what's happened over the last couple of days, right? You've seen the yields on the 10-year really start to spike, and I'll show you the 10-year yield. I think I have that on the browser over here, just so you guys can check that out. Here's the 10-year, right? And you can see that going back into 2019, we were getting close to 3%. We dropped all the way down to just sub 0.5%, and I actually felt like we were going to revisit that because of how the yield has just been getting crushed on the 10-year. Today's price action, as you can see, a nice move to the upside. Of course, that's actually the last couple days here. But you got a pretty bullish move ripping to the upside. And that, of course, is going to crush that 10-year price chart. So even though it was a high tight flag, the longer it goes like this, it starts to lose power. If that makes sense. You really kind of want to have a flag like this that's not as lengthy. For example, if it was, let's forget all this other stuff, and say I had a price chart and price moved up from here, right? So forget all this stuff to the left of this diagonal black line, and that was my high tight flag. I'd feel much happier and more confident about it because it shows an impulse and then a corrective phase, which was sideways. That is a building of power. In this case, it's broken to the south side, which tells me that you're probably going to see that trend continue, meaning that the yield on that 10-year is going to continue to rise. And now it begs the question of where is that yield going to go? Certainly 1% is going to be the easiest target, which is right around the bend here. We could see that in a very short period of time, given how fast this thing moves. So, anyway, that was the... Did I not show a picture there? All right, cool. Sorry, I'm just trying to catch up with some of the questions. Use volume with flags, goes down with the flag. Yes, generally you will see that as well when the flag pattern is hesitating. Because think about what it is. When you're looking at a bullish flag formation, I want you to think of it as a roller coaster, up or down. But the up way is better looking because when you're going to the roller coaster, you got the click, 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 and you're all sitting in the bed, you're leaning back in your seat going, oh, for the love of God, I wish this thing would just stop. I wish it would stop. I don't want to go over the edge. And then as soon as you come up onto that top riser, there's like that little free float, right? You feel like you're not even moving. You're like, am I floating? And then boom, it kicks in and you just start ripping to the south side. That's kind of the way that this works with the flag pattern, although the difference is this. The belief is with a flag pattern, and you heard Bob talk about those yesterday, and again, I want to do a special show just on patterns for you guys down the road. When you have a bullish flag pattern, the pull, that impulse move that shot up, that's emotion. That's the volume. That's the greed driving it up. So the result of that greed is going to be reflected in the flag. If people felt they chased that thing up and want to get out, then they're going to sell off and that price is going to come all the way back down to the origin of that big move up. If people are content and they feel like they bought the right thing, they're going to hold on to it and not sell, which is why you see that tight flag go sideways. So generally, the breakout happens to the upside on a bullish flag formation, which is what you would see, what you kind of saw on that 10-year. It's a little bit different with treasury products, I think, that they tend to go sideways for long periods of time. But anyway, that was the that's the answer I have out there for Nicholas on the 10-year bullish flag. All right, I'm going to almost done now. Go to some list of questions. There's a couple others here I wanted to get to. Let me jump in here. Oh, where was it? And I'm going to read through this one. Michael, he's been sending this in almost every day. So thank you, Michael, for your persistence and not getting angry with me. You know I'm busy, so I do appreciate that. He says, do you mean that the token is on Ethereum Classic or Ethereum? And what do you mean that you can restore with codes from USB stick if you have another USB stick? All right, let me real quickly explain some parts of crypto here. And I know for some of you, you're going to be like, oh, God, here we go again with crypto. I mentioned the other day that in my drawer over here, which good luck trying to break into my house, but if you did, I have these little Nano Ledger S's. And one of them actually froze up on me, the one that has a lot of Bitcoin on it. And it just crashed. And you're thinking, well, shoot, I can't get it. There are recovery codes, and basically what it is, they give you a little small piece of paper. It's usually got 24 lines, and it will be like line 1, frog, line 2, house, line 3, panic. And you have to write those phrases down as it's unique to your device. So you'll have these 24 words. Make sure you write them down perfectly clear and you don't mess up any of them because it's your key to restoring this. So if this got run over by a car or smashed or lost or ran into a chipper shredder, I could buy a new one. I could put in a recovery code, my 24 key phrase, and it would now restore me back to my account. That's the beauty of it. Now, to Michael's question about Ethereum or Ethereum Classic, most of it is now being done on Ethereum. There, you could buy Ethereum Classic, but the Ethereum blockchain is going to be Ethereum if you're buying onto anything in Ethereum blockchain. So when you buy a tokenized instrument, it's going to be it'll be transacted on the blockchain, and the code is on the blockchain of Ethereum. Now you can take that token and you can put it wherever you want in your own wallet if you have, not a regular physical wallet, guys. They're a digital wallet specifically for those tokens. And some wallets like Jaxx, Jaxx is one that I have. You can get hundreds of different cryptocurrencies and tokens on one wallet. Do your due diligence because there is a lot of risk in these things. Anytime that you have your cryptocurrencies or your tokens outside of your personal control, it's at risk. This is in my personal control. Nobody can mess with this. If I have a Coinbase account, if I have a Binance account, if I have the Jaxx wallet or a Bread wallet on my phone for cryptocurrencies, those aren't in my possession. That's in someone else's possession, and there is a threat that I lose that. The example I was giving the other day was I had some Bitcoin, I think it ended up being $6,000 or $8,000 worth, on my cell phone in an app called Bread Wallet. And Bread Wallet updated, and all of a sudden I couldn't get back in. And luckily I wrote down all of the recovery codes for the Bread Wallet, and it worked, and I got all my money back. So thank goodness. But always, if they ever ask you for these two things, number one, if you open any side of a crypto account ever, make sure you write down your recovery codes and repeat every letter twice just to make sure you got it right. Number two, two-factor authentication. Don't be stupid. Don't let that risk factor there because these guys are getting hacked all the time. Things are getting hacked. Make sure it's two-factor authentication. That will allow you to have a little bit of extra layer of protection when you're using something like Coinbase or Binance or different wallets. So that's it. That's all I got to say on those ones out there. I'm with you, Brendan. I'm a hodler for sure. Thanks, Chris. Yes, Celeste Craigwile is absolutely on the list. He is one of my favorite guys. It's funny, he's like the most even-keeled person I've ever met in my life. He's just so mellow and chill. All right, let me see real quick. There were some questions. If I didn't answer your questions, guys, feel free to retype those right now so I can get to those. I know I missed a bunch, but I want to see if I can get to your questions that may have come in while I was busy. Where were they? I'm just looking for question marks. I'm scrolling up looking for question marks. Ooh. All right. All right, I don't see any right off guard. Earlier on, I know that there was a bunch of different questions that were coming through, and I can't seem to find those. But I will let you guys type those in the chat now, and hopefully I'll get to them. There were a couple other ones. Let's see. Listener questions that came through. Let me go back to one. All right, I will bring up this question here because it's kind of interesting. Okay, yeah, we'll do this one. This is from Jeff. It says, I'm interested in investing in autonomous vehicles. How do I begin to research stocks or ETFs involved in that? It could be cannabis or any other emerging market for that matter. These are things you just kind of have to dig for. Generally, when you see, for example, blockchain, right? Remember when blockchain, this was about 3 years ago, blockchain was the buzzword. I mean, you could just add, there was Long Island, it was a Long Island iced tea company, changed their name to Long Island Blockchain, and it like tripled in value in 2 days. There was a period where just adding the name blockchain to your title would vault you through the roof. And what happened is they gained such popularity, and people like yourselves, Jeff and me, were looking for a way into that market segment. So what happened is a bunch of ETFs sprung up for that market segment. Conveniently enough, a lot of them are holding Microsoft and IBM and Intel as far as blockchain goes. As popularity of autonomous vehicles will grow, there will probably more firms in that space, and someone will build an ETF. I don't know offhand right now because I just didn't have a chance to look today, but someone will build an ETF for that. I'm sure it will be there. If it's not there now, it will be there. The problem with it is this. Many times the volume on these new technologies or kind of brand new sectors is usually very, very low. It took a while for MJ to get any sort of volume or traction, right? And MJ now is probably the more predominant cannabis ETFs. So you kind of have to dig there for that, Jeff. The tricky part is finding who are the key players. Are you going to look at somebody like Tesla and Uber? My guess is you'll have Tesla, Uber, NVIDIA will be probably three of the major components of any autonomous vehicle ETF. You'll probably have Google in there, right? There'll be a bunch of different vehicles. I don't know who the different companies will be, but somebody will build that out. But you just kind of got to look. I'll keep my ears and eyes open. If I see something, I'll bring it up. There used to be, there's a couple ETFs site trackers like etfdb.com, I believe is one, where you can type in specific market segments and it'll bring up an ETF of it, if there is one. All right, no other questions? Thoughts on Heineken? Are we talking the beer or the stock? Beer or the stock? Batista says, okay, that's a good question. Batista says, could gold future hit zero if every contract wants physical delivery? No. The thing with physical delivery is I'm perfectly fine taking delivery of 1,000 ounces of gold, right? I think every one of us has a place where we could store 1,000 ounces of gold. 1,000 ounces of gold is 2.5 bars, right? 10,000 barrels of oil is a different ballgame, right? Gold is a specific, it's a bar. You're going to get your bar. I think we could all find places to store it. So these speculators and commercial guys who got caught without oil had all these futures contracts. They had no place to put this. No storage tanks, no nothing for this oil. And they're going, oh shit. What am I going to do? I have to get out of these contracts. And that's why we saw it go negative. Look, anything's possible. But I think that was a freak event that happened with oil on the CLK20 contract. I don't think you'll see that happen again. I think people learn from their lessons. But it won't happen with gold because I don't think anybody has an issue taking delivery of gold. There you go. Oh, Heiken Ashi. Thanks, Robert. I don't have any input on that one. I looked at him years ago and I just moved on. When I was really diving into all the different indicators and studies out there, I believe that Brandon Wendell liked to use those ones. If it's not I think it is Heiken Ashi. He liked to use those. Who knows? Maybe next time he's on, I'll see if I can get him to talk about the Heiken Ashi, or I can do a show on it. I just got to, bring up some charts and explain the basic of how they work. All of those things are designed to do what? Whether it's Heiken Ashi, it's shaken oscillators, Bollinger, all the indicators, they're just designed to be decision support of what your analysis is, or not even support. It could actually be conflicting, which in case would make you not make that trade. But I think they also help you potentially anticipate market turns. I know Brandon uses the RSI, and one of the things he's looking for is what's called positive or negative divergences. And when we have those, it's not saying, let's say you have a negative divergence. It's not saying that price has to go down. It's just saying it's weakening right now. And it might go down. Just like Bob Dunn yesterday was talking about the S&P. He says it comes in that 31, 37 mark. That's his spot. Not that it has to stop, but if it does stop, that candle will reflect it. And then once it pauses, then he can like change his assessment and start to build a plan if it does break some lows, which is what I started off the show today talking about. Let me, and CGC. Let's bring up CGC. Why not? We'll bring up CGC from my good friend Mike out there. CGC. Now, I'm not talking anything about fundamentals, right? I'm not a fundamental guy. Actually, you know what? I was perusing through a bunch of different YouTube channels. You know, I like to see what people are doing, and maybe I can make the show better. And I found a guy who does some fundamental work, and I was pretty impressed with the fundamental stuff. So I'm going to see if I can. I don't know if he wants to come on live, but I think what I'm going to try to do is every now and again, I'm going to try to bring this guy on to. We'll pick a stock. I'll just say, hey, give us some deep fundamentals on it. I mean, this guy goes deep into fundamentals, and I found it to be very beneficial, especially for anybody who's a longer-term investor. And, you know, maybe it's a special segment we'll do once a week or something. I just thought it might be nice to mix it up a little bit, since a lot of the content here I do is predominantly technical. I have no issue with fundamentals whatsoever. I think that there's a value for them. It's just generally for longer-term investing, which I'm more of a short to intermediate term guy. So let's take a peek at this CGC here. This is Canopy Growth. Obviously, you saw the real big run-up we've had in most marijuana and cannabis stocks over the past month. It's given back a lot, right? It's gone from 22 all the way down to about 16. To me, this is pretty important. It's basing. I would be okay going long here, actually. And all you got to do is make sure you get a stop loss down below 1580. You get a close below 1580, dump it. Be out of this thing. But you have this pretty big drop. It looks like it's stabilized right now. Let's see what this looks like in comparison to MJ. MJ is holding stronger, so CGC is certainly weaker of the two. Let's go to ACB, see what ACB is doing. ACB, some might actually call that a flag pattern, but it's looking a little too weak to me. I actually like this. I like the price action of CGC better than ACB. And then Tilray. Let's get Tilray. Wow, you know, Tilray's been just the dog of the bunch. It's been just horrible, but as trends go, it's been on a really nice trend since about March 17th. It's just been trucking to the upside and moving. So, you know, as a sector, I'm more for buying the index as opposed to picking individual stocks. I just feel like that's probably a safer way to go. But CGC, I think it looks good, Mike. I think you're actually, I think it looks good on buying there. Just make sure you get a tight stop there because things can whipsaw on you, and that's obviously what you don't want to have happen. Let's see. Oh, wow. We're rocking through. All right, let me go to, you want to look at APHA? Why not? That's a popular one lately. APHA. Technically, this looks better than all of them, right? Why? Because it hasn't really started to drift down. It's been bullish for the past 3 weeks, real strong, making new highs. This to me looks like a real strong candidate to go long. The only problem I have with this guy is where do you go long? Right, trying to buy right now, you're looking. I'm not saying all-time highs, but you're looking at relatively high highs for where it's been. It's the highest it's been in 3 months, 4 months. So, you know, do you wait for a pullback here, or do you jump onto it? I personally would wait for a pullback, but the problem is you might miss the move. All in all, this one does look the best from a technical perspective and trend strength. All right, Gerald, he wants to know about silver. S to the L to the V. Yes, silver also on just a ripper of a trend recently. Let's go to the monthly on. Let's see if I can pull up monthly on this bad boy. This is obviously silver is looking at the longer term trend. I got the monthly here going all the way back into 2007, a little bit far back there, but lately it's just been ripping. And now you are coming into those highs we saw from early January, so it rebounded pretty good. I'll put this back to a weekly just so we can see a little bit clearer. You've got some aggressive supply levels. I mean, the 1750 mark, I would say, is an extremely strong supply zone, just based off pure price action. Other than that, you know, I think I'm bullish on gold and I'm bullish on silver. I think that those two are probably a good place to park capital. Not all of it, but a percentage of your capital going forward. Okay, good. Let's see. Joseph says, fundamental analysts help you understand the specific industry. Which stocks are strong? Sure. Well, yeah, you're right. You're right, Joseph. You can't sell which has got the best management, but I can very easily look at a comparison piece, and I unfortunately don't have the time to show that to you today. You can look at, maybe I'll do it tomorrow. I'm going to have Sam Evans in the program tomorrow, but normally, I can stack up, 5 or 6 different companies against each other on a performance chart, and you can see real quickly which one's the better performer. And that should usually clue you into who's got the better management, who's got the better earnings. Of course, you can support that with fundamentals. For some of you who might want access to something like that don't want to pay a subscription fee to any software, take a peek at stockcharts.com. Excuse me while I type. It's tough for me to type and do all the stuff at the same time. Stockcharts.com. All right, I want to just real quickly do a perf chart for you guys. I know we've done this in the past, but it might be beneficial for those who have not seen this before. So I want to check it out here. As for some reason, it's just taking a really long time. Now I got this fiber, and I just don't know why it feels like it takes forever. All right, so once it loads up here, you can go into this top box, and you'll see there's a bunch of different chart types. The perf chart is just simply a performance chart. So let's say you wanted to look at MJ, you want to look at ACB, you want to look at APHA, and how about CGC? All right, so we'll look at those 4 cannabis stocks. Tilray, why not? I'm going to bring in those stocks, and we'll compare them against each other. What's great about this, and I know it's kind of hard to read because the lines are a little bit light, but I can now see right away, who's the leader, who's the laggard, who's performing best from a specific date nonetheless. So let's say we want to go back to January 1st. So let me see if I can slide this over here. Oops. Come on. It's giving me 200 days, but I want to go to January 1st. There we go. So since January 1st, poor Aurora Cannabis is down over 75%. Clearly the laggard of the bunch. Tilray, actually, I believe that's Tilray. I'm colorblind, so I believe, Tilray's down here. What's the purple? Canopy Growth, which we talked about as looking pretty good. It's only down 25%. And I know that seems like a ton, but given where this thing was previously, that's not too bad. And this is a great resource for anybody looking for comparison and contrasting different companies, different sectors, different industries to see what is the real strong one at that moment in time. I'm definitely a big fan of perf charts. I use them within TradeStation, but if you want to use stock charts, that's a free resource for you guys out there. Cool. All right, let me do a quick little wrap up here. Again, if you guys like today's show, do me a favor, hit that like button. Always appreciate that. Tomorrow's show, we're going to have Sam Evans back on the program. Sam, he said he might have an announcement for us. I'm hoping he does. There's a lot to talk about in these markets, but hopefully Sam will go over some Forex because we've seen some monster moves. We were looking at that USD CAD. There was a gentleman who was talking about going long in the CAD, and we're both going, go short of that thing, and it's been almost free-falling since we did that show with Sam last week, so we're pretty excited to see that. Here is what we've got cooking for tomorrow with regards to your economic calendar. There's not anything really interesting on the earnings front. Tomorrow you have, I guess you could say probably the major things at unemployment rate for the U.S. You notice the 5:30 in the morning, so most of these will be 1 hour before the market opens here in the U.S., you have a 19.5% unemployment rate expectation. Normally I would say we're going to go way worse than that, but I tell you what, given how quickly we've kind of recovered from this bit of coronavirus pandemic fear, I have a feeling we're not going to beat 19.5. I have a feeling we're going to be less, and that could lead to another market rally tomorrow. That's just a crazy guess, just the way things have been going. You're looking at a lot of numbers change. You also have this non-farm employment change, but remember the ADP non-farm employment change came out yesterday, and the numbers were pretty much the same. They're expecting negative 8,000. ADP was supposed to be negative 8,000, negative 8 million, and the ADP was negative 9 million. So I think we'll see the same thing. The actual result for ADP non-farm employment change was negative 2.9 million, I believe. So we'll probably come out at somewhere around 1.8, 1.9 million for this non-farm employment change. Okay, that's it for tomorrow. Again, the guest for tomorrow's show is going to be Mr. Sam Evans. Do me a favor, if you guys, obviously, if you like the show, give us a little thumbs up. But if you have questions, I've tried to do some of the questions that were in the chat. Bring those through to today's discussion. I was actually going to bring a guest on today, but I have to get to some listener questions. So I got to a few of those today. If you have some, put them down below the YouTube videos. Of course, if you want to send me something more personal that you don't want to be in a public view, you can send that to TraderMerlin.com. I've got the webpage up. I think it's still up. I really got to do something there today. You have TraderMerlin.com. That's where you can send in the comments and questions, etc. So thank you guys so much. Thank all of you who sent in contributions today. I do appreciate that. Brendan, congrats on the house. Go celebrate, have a nice cocktail this evening, and I will see all you guys tomorrow with Mr. Sam Evans. Take care, everyone.